Oops. Good morning, everybody. So today's question is going to be, does it fit my plan? We'll come back and visit it. But does this fit my plan? For some of you, you're saying, you know what? I'm taking high probability trend trades. I'm taking a trade that gives me odds favorable momentum. I'm taking a trade that has room to the targets. I'm taking a trade from an area inside of triggers. I'm reducing risk because that's what my plan says. Good morning, Steve. And guys, what we're going to do today is we're not going to worry about anything other than does it fit my plan? Can we put a checklist on it? Good morning, John Novak. Can we say with that look of momentum, we'll go break even, KISS plan, with room to the target, is this my trade? And guys, the answer I hope is yes, because this is the absolute best of the best, highest probability trend trade Nexgen teaches. Has strong triggers, has room to the target, and what we just saw get up there is we're on the brink of $300 in the bank because of one pattern that's been proven to win more than it loses. Boy, that was good timing. My boss just showed up. But guys, this is what we're going to look for today. We're going to do a lot of chart reading. We're going to talk about why that was momentum. We're going to talk about why we had room to our targets. And we're just going to read charts today. I'm excited about it. But first, we're going to check news. What is today? Is Tuesday, the 24th of June. And at 10 a.m., guys, Fed Chair Powell testifies. They're slating it as high impact news. Nope, John, you're saying he's not going to testify? Source released testimony text 90 minutes earlier than scheduled. There we go. So, just kidding. They leaked early at 8:30. Oh, that would explain that big spike when there was no news. Well then, guys, all we have is the cheeseburger consumer confidence, CB consumer confidence, medium impact, Richmond manufacturing index. These could move the market. They could shake it a little bit. When I'm looking at my news each and every morning, I'm looking for high impact news, guys. I'm looking for that news that could change the direction of the market, that could make it too fast to trade. The medium impact news, this is one of those, hey, let me go ahead and understand that there's something going on. Maybe I'll protect my position, but it's those red boxes that we're looking out for. For those of you that haven't been with me for a while, we have changed the format a little bit. Wow, look at that. No reason to ever get out of that trade, but we just took it for 300. We're going to go through today, and we're going to look at crude oil, and we're going to look at the S&P, guys, and we're going to just read our indicators. And we're going to do it revolving around, open up picture, there we go. Using this as our core, the idea of the high probability trend trade. This is a trade that typically wins 70 to 80% of the time when you follow the rules, guys. This is a trade that, because of that success rate, creates an enormous amount of success. And most importantly, guys, this is a trade that's going to help you learn to read your indicators, to look at your charts and really talk to yourself. Hey, do I have advantages? Is there an edge? And if there is, that's when you're taking the room, or the trade, excuse me. I'm also going to give you what's called the KISS plan, guys. And the KISS plan is just a stepping stone in your journey. It's a roadmap for you to follow as you are looking for these trades. So we're going to talk about defining entries, making sure that we have strong triggers, making sure that there's nothing in the way, room to our targets, and then, guys, using an area inside of triggers for entry. We're going to talk about the highest probability trend trade, and we're also going to examine this 50-50 trade. And this actually is the trade that most of you take the most often. And what it is it's using the idea of momentum, saying, hey, because of the momentum, because of the trigger line location, these areas have the potential to break, and then taking advantage of that, but managing a little more assertively because it's not perfect. So The idea is that we start talking in terms of advantages, that you start talking to yourself every time you look at your chart. What's going good for me? What's going against me? This is going to help me understand how to manage. So I put this in the room. And guys, a high probability trade is going to have the advantage of momentum. A high probability trend trade is going to have nothing in the way. You're going to have room to your targets. And the high probability trend trade is going to have an easily defined entry area, one of those areas inside of triggers. When you eliminate one of the three, so you've got two left, whether it is momentum and entry, whether it is momentum and path, whether it is entry and path, once you lose one of those core advantages, guys, you put yourself in a medium probability scenario. That medium probability scenario means that you may have to manage a little more assertively, that you may need to take quicker profits, believe that it's a base hit, not a home run. And then sometimes your guts are going to tell you, you know what? I've only got 33% of the good stuff, but I'm going to take a trade anyway. And we're going to call that low probability. And I feel like just the idea of the phrase low probability should be enough to keep us out, but it's not always. So if you find yourself, man, I don't really have a whole lot going on, I hope this one works, manage assertively. You're going to control the entry. Nobody can make you enter the market. Nobody can force you to put your limit order there. Nobody can make you stay in the market, guys. You're in control. But when you know what's working for you and against you, what it's going to do is it's going to help you make decisions not only on whether or not you're willing to take that trade, but it's also going to help you make decisions on how assertively you feel that you need to manage that trade. I've already dropped that picture in the room, but I think this is a good way to think about it. We're always going to look for advantages. So I'm going to blow up my crude oil, and we're going to do a couple just basic lessons real quick before we get into just watching the market and talking about what we see. I'm going to take everything off of this chart with the exception of trigger lines, because trigger lines are going to define the momentum in the market. Initially, that's rule number one. In strong triggers, rule number one, it is a separation. It's when the smalls in an uptrend with a green background break above the large, and this gap that you see between the small and large, well, this lets me know that I have strong triggers. This is the advantage of momentum, and when I have that, look, the odds are favorable for the market to continue up. You'll see these tails on a large chart. You can use these to study. These are potential entries with that advantage of momentum. When the gap goes away and the small triggers work their way back inside of the large triggers, this is weakness. This is the opposite of strength. And when you have weakness, very often, you'll see larger retracements, sometimes from the middle of nowhere. Strength comes through separation. When the smalls work inside, that's your weakness. And guys, that's where you see these bigger retracements. Strength pushes. Weakness can stop. And guys, weakness, when you reach a key Fibonacci area, is even more likely to stop the market. So I'm going to put our areas back on. And I want you to see how, even with strength, these amazing Fibonacci areas can help you pinpoint highs and lows in the market, give you things to trade towards. But they're also areas that can create these big bounces, areas that need to break. And we're going to use the trigger lines to help us understand when they have really not much potential at all to break, when they do have the potential to break, and when they're more likely to break, guys. And it's all a trigger line scenario. When you reach an area, if none of your trigger lines have made it through that area, a great example right now on the most current bar, smalls and large haven't made it through. Guys, the area is more likely to hold than it is to break. Your trigger lines are going to tell the story. If two of your trigger lines, both of the small, break through the area, but the large trigger hasn't made it, the area does have the potential to break, not necessarily likely. Once you start getting three trigger lines, when you start seeing, let's see if we can find an example. Well, I guess it's probably going to be a broken. You need momentum. So we're seeing a lot of these areas just stop in the market. It's hard to find an example. When you get 3 trigger lines through, I'm going to have to go back to a picture because it's difficult to show 3 trigger lines through in a live market. So we're going to grab this one right here. Dun, 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 and I'll share this with the room. And this is the basis that we're going to use all day long. We're going to look at the momentum in the market through the trigger lines, and we're going to look at the trigger lines up against the areas and help us make decisions. So how many triggers are past your area is the answer to everything. It really is. It's the keys to the kingdom, guys. The first option is none. The area is more likely to hold. The second one, 2 triggers, probably not breaking. And number 3 is if there are 3 or more triggers, meaning that not only the small triggers, but one of the large triggers. This is a good look for a breakout. It doesn't guarantee a broken area, but that's going to be the best of the best look. So as we go throughout the day, we're going to talk through first momentum, and then we're going to talk through whether or not we have a clear path, whether we've got 2 triggers, all 4 triggers, 3 triggers, and start talking about the likelihood of an area to break, to hold, to create a bounce. And we're also going to talk about this circle right here, because this circle was the entry for the highest probability trend trade. So when we're talking about trend trades, rule number 3 states you will buy or sell a pullback in an area inside of triggers. And I'm going to use this picture as a pretty awesome example. And I was a little late. I was downstairs or upstairs talking to my wife. So I did get in a couple ticks lower. But what we're going to do, and what you should be doing if you're following a plan, is you're going to say to yourself, there's that separation, and I have strong triggers. The 1-to-1 hadn't printed yet because it actually printed when we got above the area already. But you're going to say to yourself, I haven't reached the area. I've got room. We're going to call it a clear path. Now this brings up an awesome discussion that we were having this morning, guys. And I want to share this with you. There's a misconception about, let's get this out of there. There we go. I'm about 5 ticks away from the actual area, 4 ticks away from the area. And you'll begin to say to yourself, oh no, that's not enough room to make money. That's $40 worth of profit. I can't take a trade with only $40 worth of profit. Rule number 3 is designed to give you less risk and give you higher profitability. And rule number 3 says you're going to buy a pullback, and you're going to do it at an area, at a fib, at a midband, at a yellow 1-to-1. And you're going to do it inside of those trigger lines, large and synthetic. So your large and synthetic triggers will show you where that pullback is most likely to go. The areas inside will show you where it's most likely to bounce. And what happens is when you wait for that pullback, when you enter at the area inside of the triggers, you turn that $40 worth of potential profit into well over 300 on those 2 contracts. We did it live right as the market opened up. And these tails on the large chart are actually the pullbacks on the small chart. So you can go back historically and circle tails and see if you had a rules-based entry, guys. And it's a great way to study, and it's a great way to build trust in this methodology. So weak triggers, and sure enough, the market pushes down. There were absolutely no areas inside of triggers, guys. This is a great opportunity for you to sit on the sidelines, to say, you know what? I'm missing 2 out of 3. I choose not to take the trade. The market pulls all the way down, guys, and we reach Fibonacci support. We get to the 1-to-1, and the large triggers are above my reversal bar marker. And this is what we call the gap theory. And the gap theory states that if price accelerates away from these large triggers and hits Fibonacci, whether it is a fib, whether it's 1-to-1s, whether it's a mid-band, very often and very likely, price will close the gap back to these triggers. And it doesn't mean, hey, take a long trade. What it's telling you is that this is a pattern that says, hey, any shorts that you take between here and here are more likely to get run over as price closes that gap. It is a let's pump the brakes. Let's be patient because we got to the area and my triggers are nowhere near breaking. Guys, this is an awesome pattern. It's a repeatable pattern. And it's a pattern that you're going to find in the spreadsheet that I like to give you guys every day. I'll drop it in the room real quick. This spreadsheet, guys, this is a great way to study. Under basic rules, you've got strong triggers, you've got clear path, you've got entries. All the three rules of a high probability trend trade defined. We're going to talk about each of these today, probably take a lot of pictures. There's a study guide with over 500 pictures of Nexgen clients using the software, embracing these advantages, finding success. There's ideas on management. And then the patterns that repeat themselves, guys, where you see it say gap, 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 gap. That's exactly what we were looking at here. And sometimes the gap doesn't close. And this time it didn't because I'm talking about it live. That happens sometimes. But the momentum is strong. Price reaches yellow 1-to-1s. And it's trying to create a bounce. And we'll see what it does. 3 divergences in the same price range is a pattern that says, hey, we're more likely to push up a little bit than we are to just rail down. Pushes to the top end of the triggers. And now we're working our way down. Odds favorable momentum. 3 triggers through the area. Right back to the mid-band inside of triggers. And down it goes, guys. And if I move this circle and put it over that tail, there's your pattern. And it happened fast. Faster than I could do it, guys. And that's going to happen sometimes. But this is your pattern. Strong triggers. 3 triggers through the area. Take a pull back to an area inside of favorable large triggers. Was anybody quick enough on the draw to catch that one? Sometimes the market just moves too fast, guys. And you can use these to study, but maybe not necessarily catch the trade just yet. 3 divergences, reaction right at the key Fibonacci area. And now we've lost that advantage of momentum a little bit. No areas inside. And we're working our way into what we call a strong trending market. Over 30 bars in the same direction. Absolutely no reversal bars yet. And it looks like they were trying to get to 65.11, doesn't it? We're seeing the reaction right at the key area. And now we're just being patient. We're waiting. What are they going to do? Are they going to break it? Are they going to bounce? Guys, these guys are on an absolute tear. You think you'll critique that trade? Nice trade. Thank you. This one right here that we just circled, Cav, that's perfect, isn't it? It was way too fast for me to catch. I couldn't catch it. I watched it set up, and by the time I said 3 triggers through, it was already gone. That happens sometimes. That's not my money. But the pattern is true. So when the market is a little more mellow, when it slows down just a little bit, not right at the open, we'll be able to use that idea of momentum, the potential to break, areas inside of triggers, and see what the reaction is coming off of it, right? All the momentum, room to the fib, pull back to the areas inside of triggers, reduce risk behind a reversal bar, and then it's just win or lose. There we go. It pushes down a little further, still in the range. But guys, what we're doing is we're looking at entries. We're looking at advantages. We're talking about, do I have momentum? Is there room to the target? You picked up 38 ticks, Victor? Very nice. Guys, sometimes you may need to go twice. Sometimes you'll take the perfect entry. They'll spike down just a little bit more. And guys, what they're doing right now is they're still cruising with momentum. They're coming from an area that reversed the market. And crude is moving fast right now. It is moving so fast. I love 38 ticks, Victor. It's hard to get mad at a $400 trade, isn't it? And right now what we're seeing is small triggers down and large triggers up. And we're like, whoa, that's not the best look. That's not that separation, everything going the same direction. All of my triggers are below a divergence low, but all of my triggers are also above Fibonacci support. Guys, this is a market that we need to get above 2350 or below 19.5. and just break out of these areas. Man, Victor, I don't disagree with that plan. It's less stress on a micro, isn't it? It's easier to focus on the patterns than it is to focus on the money. And that's typically what produces results, guys. So as we go through the day, that was a pretty quick adrenaline-filled start. That was a lot of fun. We're going to do a couple things. We're going to look at two charts all day long. We're going to look at a large chart and we're going to look at a small chart, guys. We're going to let the large chart define the direction of the market through the background color. We're going to let the large chart define the momentum through those strong triggers, that separation. And we're going to let the large chart tell us whether or not these areas are problematic, have the potential to break, or if they're in the rearview mirror. Small chart is nothing more than an entry chart, guys. We're going to refine that big bad chart and make sure that we're not taking chances that we don't need to take. We're going to use areas on the large chart to define problems. We're going to use divergence highs, divergence lows, yellow 1-to-1s, Fibonacci support and resistance, guys. And we're going to do that trigger comparison every time price gets to one. These are where the people in control make money. We're going to discuss momentum, making sure that we have the separation. You guys are going to have the ability to avoid weakness through the recognition, through the chart reading. And you're going to have the choice of whether or not you decide to trade into areas. And we're going to talk about all of this live. What I need you guys to do, and what you've already started doing, look at this, can't seem to get an edge, is keep posting those pictures, guys, because every picture that you post in this room gets feedback, and all the feedback is designed to make you a better trader, a better chart reader. So as we move forward and we get into it, we're going to go back and forth between your pictures and the live market. Have a plan. Learn the rules for your plan. One of the things that I encourage you guys to do is have a checklist. In that KISS plan, there's a high probability trend trade checklist, guys. This is exactly what it'll take to get me into the market. This is precisely what has to happen. And these are the rules that I'm writing on my chart, because what I want to do is I want to be able to repeat the success that I'm having. I want to be able to repeat the wins, and I want to be able to avoid the losses, guys. So as a brand new user, I encourage you guys on every chart, identify momentum, terminations, and entry, whether they are present or not. Write it out, get in the habit of embracing advantages. And your annotations are going to serve as the recipe for repeating these trades that typically win more than they lose. And it's also going to identify challenges. So if you post a picture in the room and you're not reading your indicators correctly, I'm going to work with you. I'm going to give you a lesson. We're going to go through and we're going to talk about how to read them more effectively. If your entries are late, if they're early, if your stops don't make sense using that idea where the market shouldn't go, every time you post in the room, it's a private session. And every private session isn't designed to do anything more than help you read your indicators more effectively, than to give you my input on what you're telling me you saw and you did. So simulate and practice and post in the room, guys. The people that post the most will always get the most help, and they typically move forward the fastest. I dropped that KISS plan in the room, guys. It's an outstanding foundation for brand new users. Trend trades are not the only trades, guys, and we'll probably see some other examples today, but trend trades are the focus. Trend trades are the one that gets you speaking in terms of the advantages. Trend trades are the ones that say, hey, here's my charts, this is what I see. It's either great, it's okay, I'll manage assertively, or it's horrible, but my gut tells me I should do it anyway. Can't wait for the loser. Remember that not all good trades win. Anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. And guys, not all bad trades lose. So we need to know the difference between luck and edge. We need to know the difference between feeling like I'm getting lucky, right? I fought everything, but I made $100. to stop focusing on the money, but rather focus on the execution of the method. So we're going to scroll up a little bit. Paul and I had a great conversation this morning in the room. Feel free to go through and look at it. And all we did is we just kind of talked about what we saw. And Paul was doing market replay, which I think is an outstanding way to become a better trader, because what you're doing is you're going back and you're replaying a market that you've already traded. You're fixing mistakes, guys. You're taking trades that you should have taken, and maybe you're avoiding trades that you shouldn't have taken. And I'm going to encourage you guys, when you go back and you do market replay, focus on the rules, especially if you remember what the market did. Because I used to market replay, and I would say, oh, I remember the market ran for 50 points here, and I would break every rule just to see simulated money. So focus on rules. Paul says, check it out. I've got a strong bottom, which means that he had a termination that reversed the market. And guys, when you have a strong top or bottom, it's really the people in charge saying, you know what? The sellers are done. The buyers are taken over. They were able to reverse the market, and they could give you your rules met. And then Paul has what we call a 50-50 trade, which is the small triggers are through and the large triggers are not. It has the potential to break, but it's not the perfect trade. I'm missing the clear path. So Paul goes to a smaller, faster chart, and he says, you know what? If the entry is solid, if I don't have divergence on that small chart, if I have strong triggers on the small chart, if I can define an entry at an area at those triggers, I'll take this potential to break. And what Paul does is Paul says, you know what? Not only will I identify my entry, but I'll force it to go in the direction of my trade. Forcing confirmation, guys. If the large chart looks great, but your small chart's not perfect, if there's a challenge somewhere, forcing the market to go in the direction of your trade gives you a place to put your stop. It gives you an opportunity to reduce risk. And Paul gets in, let me see what it says, 15 ticks risk, which is high for 41 ticks, more for pro than cons. If real money goals reached, would be done for the day, trade sim. I love it. Great trade, all the way up to trouble. And now I'm going to show you the things that I notice that you guys don't always. So Paul takes an exit right at Fibonacci resistance. He says this is an area that could stop the market, could create a bounce. This is an area where fights tend to happen. I'm going to get paid, and I think it's beautiful. And then, Paul, you make the decision to trade directly into the area. So one of the things that I encourage, and Paul and I have this conversation, we're going to do it here as well. Every trade you take, notice that the only annotation from the large chart is strong bottom. Every trade that you take, guys, talk about momentum. Do you have that strong trigger look? And the answer is yes here. And then you have to talk about that path. Do I have a clear path? Well, price reached Fibonacci resistance, and all of the triggers are still below. This is an area that's more likely to stop the market than it is to break. So your 50% of your advantage is here. Now you have to go in and you have to say, does my small chart warrant breaking rule number 2? So Victor, I'd love to see the pictures of your trades if you wanted to share them. I love it when you guys shout out in the room, man, I'm kicking ass and taking names. Show me your ass kicking. Drop it in here. Tell us why. Write your rules. Let's see. Let's create that recipe for long-term success, man. Make them notes. So when you talk about, does the small chart warrant breaking rule number 2? I'm not saying that you can't trade in determination conditions, but do you have the best look? So there was already a divergence here. There's a second divergence here. Small triggers are below the large triggers, right? And Paul still says, hey, I'll get in at that area right on top of the synthetics. It's a good entry if you're going to take a chance. And then third divergence prints, which lets you know that this area is more likely to hold than break. And Paul, you hold through all the way to the fourth divergence. When I talk about setting up a recipe for success, and I also mentioned that there are people that trade in termination conditions, you don't have to sacrifice so much on a small chart. It's okay to wait to see if it holds or breaks. And if I were writing a plan, and this is where I want to go back to having a checklist, I should have a checklist for this trade that says with momentum and without a clear path, with two divergences and a trend trade and a trend change on my small chart, enter at the midband at synth triggers. And what happens here is you start to look at this and you say to yourself, man, that may not be the best plan. That may not be a plan that wins more than it loses. That may not be a plan that's giving me an edge. And guys, sure enough, the market goes down. It dances for a minute and Paul's able to avoid catastrophe. But if you were writing a plan, would you ever write a plan that says with two divergences and a trend change, my entry is right here? Probably not. But what you could do is you could write a plan that says with no divergence and strong triggers, I'll take the first shot at retesting areas. And now what you have is a set of advantages, a set of rules, a very, very repeatable plan that says, okay, there will be times when I may trade into a termination condition, but my small chart has got to give me this for me to feel comfortable with the chance. And let's see. I know it's coming here. I saw this and it made me think about it. Weak bottom, all the momentum in the world, but directly into a termination condition. And guys, I want you to see the entry. Strong triggers, no divergence, definable entry, and getting out on the retest because it looks like it's about to fail. Quick, quick, quick hits because there's a problem, but forcing the entry chart to be perfect. Pete, nice job on that one. And it lends itself to the lesson. It definitely lends itself to the lesson, guys. I don't tell you to not break rules. I don't tell you to follow rules. I tell you to have rules. Because when you have rules, you start to pull the emotion out of it and you can stop trading your guts and you can start trading the patterns. And this is just good study. So a perfect termination, and look at that, the area did hold. Perfect termination reverses the market, and you recognize the momentum trade that we talked about yesterday, Paul. When those small triggers go zipping up, little snap back right to the area, right at the small triggers, creates an opportunity to capitalize on that termination condition, and you nailed the look right there. That's the look. Great job on that one. All right, good start to the day, right? These guys caught in a range. Only two triggers through, and it didn't break. Only two triggers through, and it didn't break. Trend is down, triggers are up. Guys, the S&P is telling you it's time to have a bagel. Go toast a waffle. Reload your coffee. Everything's set up. And now we're just waiting for it to agree a little bit, right? Support just held. Smalls are turning up. Large are turning up. You even have three divergences in the same price range. Guys, this is a pretty good look. This is a look that says, hey, support held. It held again. It held once again, and now every one of my indicators are pushing up. I don't have the separation, but I have every indicator that says up. This is where a lot of people will say, okay, I can say there's more going for this trade than there is against. I've got strong triggers on the small chart. I've got the beginning of my smalls turning up on the large chart. I'm coming directly from a termination condition, and I've got a beautiful midband inside of triggers that could potentially create a bounce to help me finish the move up to the next fib because of the termination. Is everybody following me on this? What are we sacrificing? We're sacrificing the strong trigger look, but we have the clear path and we have a well-defined entry. And if we're 1, 2, 3, 4 ticks below the bottom of those triggers where the market shouldn't go, it's a relatively low risk trade. Now, what's the expectation of the trend trade? We're hoping for Fibonacci resistance. It's not a bad idea. Let's put a stop a couple ticks below. A reversal bar will not only hit my first profit target of 100, but it'll also give me the opportunity to reduce risk right behind. At this point in the trade, I don't have the strongest trigger look, but I do have a clear path and an entry. We're in that medium probability scenario, and we take a small loser because we didn't have the momentum to push it up. Does that make sense to everybody? We had to speak about the advantages. I didn't have momentum. I did have a clear path, and I had an entry area. This is a medium probability scenario. Because it's a medium probability scenario, I make sure that my risk is pretty low. Guys, an 8 ticks of risk is worth it to me every time coming from this look. This is a normal part of a positive equity curve. This is a cost of doing business. Things don't always work out. So now we've got no momentum and we're directly into fibs, and we got to say to ourselves, all right, let's let them regroup and I'll regroup as well. Good stuff. I love the live chart reads. Absolutely no shorts. Too soon for a long. Let's just relax for a second. Let's see what the market's going to do. Whew. They're trying, aren't they? Look at the fight. And what have they done for us? They have defined a clear range I want to see a breakout from before I start to move forward. All right, so while that market hangs out, let's go look at another picture or two. All right, Joel. Odds favorable. So we're going to go back to that idea. You think you did the picture right? This is a 50-50. Seen it all morning and repeated. We'll take a look in just a second, Victor. Strong triggers. 1, 2, 3 lines through the area. Perfect pullback right to areas inside of triggers. And down it goes. Very nice. And Joel says, you know what? Divergence isn't my best look. But if I stack on a trade the advantages that I have in this trade and I compare it to the one thing against it, Joel says it was worth his money to take a shot. And sure enough, beautiful trade, Joel. Nicely done. All right. And this is one of my favorite pictures ever. And another reason I think writing rules on a chart pays dividends just from a mental health standpoint. This is a trade that had strong triggers. This is a trade that had a clear path. All the triggers are below trouble. We haven't reached the next area. This is a trade that had a pullback to an area inside of triggers. Guys, this is a high probability trend trade recipe. This is a trade that typically wins 70 to 80% of the time. Do I have any math gurus in here? If something wins 70 to 80% of the time, how often does it have to lose? Just for math reasons. Every 10 trades, I'm probably going to win 7 or 8. I've got that potential. Every 10 trades, I'm going to lose 2 or 3. It's a cost of doing business. So guys, when you have strong triggers, when you haven't reached the area, when you have the perfect pullback, guys, this is your recipe for success. This is the highest probability trend trade Nexgen has ever taught. What you're going to be inclined to do, and I think we're all guilty of it, is if this trade doesn't work, you're going to start looking for the reasons it didn't work. You're going to start saying, well, I didn't have this. I didn't have that. This look, that look. And guys, the reality is this is the greatest trade ever. And if you believe in momentum path and this entry, you accept this loss and you don't start saying things like, well, that was way too close to Fibonacci support and this doesn't work. Even with all these advantages, being 7 ticks from a fib doesn't work. To which I say, it absolutely works more often than it doesn't. Guys, this is the exact same look going up as Paul took going down. It's just a pattern. It's a pattern that can be proven to win more than it loses. So if you omit your annotations, guys, you're not reminding yourself that sometimes trades lose. You're not reminding yourself that sometimes you have to be the button, not the boot, right? So Paul, this is an outstanding trade, and it's an outstanding trade that just didn't work, man. But it fits the recipe for the absolute best of the best. Nice trade. I used to get upset about losers. I really did. There was a time in my life where I would get bummed about the losers. And what I realized was that the losers aren't a negative when you're following the plan, guys. The losers are just a part of trading. I've never met a 100% trader in my life. And the more you trust your plan, the less likely you are to be upset with the losers. Man, great lessons this morning, Paul. Great lessons. All right. Pete says, check it out, guys. There's that strong top we talk about. A termination. It reverses the market, creates odds favorable momentum. The best of the best look. And something wasn't right on Pete's chart over here. And let's figure out where you're at. 66.55, 66.55. So it looks like there's a little dance going on right here. And Pete says, I'm going to let it dance. And then once my small triggers roll and everything looks good, I'll get in with all this momentum below the trouble, and he rides it directly to the fib, guys. Momentum and path is one of the most powerful couplings you could ever create. When you have momentum and path, you're going to find a way. This was the picture we made for momentum and path, guys. This is momentum. When you have that separation between the small and the large, I want you to feel like you're behind the wheel of this bad boy. And when it's clear sailing until you hit the mountains, guys, it's going to be hard to stop. It is going to be so hard to stop. Pete knows it. He gets in with the momentum, and he gets out right at the mountain. No matter what happens next, he's getting paid at areas. Beautiful trade, Pete. And remember, if you have questions about somebody else's chart, feel free to ask. But also remember that this is Pete's plan. And Pete's willing to trade in determination conditions because he has the experience to know when to make exceptions, guys. He has the experience to say with this much momentum, with no divergence, with a clearly defined entry area, it's worth my money to take a shot. But because it's not perfect, I'm going to get paid quick. Pete, great job on this one. Your plan grows as you grow. And then here's the beauty, right? Strong bottom, all the momentum in the world. Pete says, let me get above Fibonacci support. Let me ride that momentum, guys. This is 4 contracts. 2 of them are off at $100 each. Did you take 3 off? We got 1 missing. Balance off at target, up here at 55. Okay, help me with math. 200 plus another 330. That's a little over $500 or $600, guys. Right in that $500 to $600 range. 1 trade based on momentum and room to targets. Momentum and path. I really can't stress that enough. You will find a way. Pete, awesome, awesome trade. All right, let's take a look. We're losing momentum. but his path is clear. So 2 out of 3. There's your area right at the triggers. You don't believe it, so you get in on the way up on the good side, let the triggers roll, and you're able to ride that large chart all the way up. Nice trade, Paul. So plus 58, high probability trend trade. And this is where I disagree a little bit. Not a high probability trend trade, because you're lacking the momentum that you need to create a high probability scenario. But you do have clear path, and you've got a very clearly defined entry, right? Medium probability. And Paul, all this means, so let's go back to the very simple annotations again. Not strong triggers, clear path, pull back to areas. Since I don't have momentum to push this up like I want, if I see change on the small chart, I'll manage. That's all. That's all you're doing, is when you say to yourself, that's not the best momentum, it means I'm going to look for change over here. Maybe you start getting another divergence. Maybe it starts breaking below those triggers. Something that says, Paul, this momentum loss over here isn't giving us what we need. And you can see it up here with those weak triggers, with a divergence right at an outer band, with weak triggers here. Sure enough, there's your reversal. So your patience on the entry pays dividends. You're on the good side of the triggers. Once it closes below those triggers, it's game over, and it's game over for the duration. Great trade again, Paul. And I'm not saying anything other than, if you go through the steps, what's in favor of the trade? What's against the trade? If I have all 3, I'm going to be pretty loose with my management. If I only have 2, I'm going to ask myself, well, which one's missing? If momentum is missing, I'm going to look for small chart losses of momentum to help me see when it might be changing. If my path is missing, I'm going to insist on momentum. I'm going to demand momentum in a low risk entry. So always going back to what's in favor, what's against. Great job, Paul. Great trading. I like your patience on these entries when it's not perfect. All right, Victor, let's see what you did, brother. Got in on bounce off of 1-to-1s from 5-1 chart and got out on bounce from divergence on the 5-1. Okay. Can we turn it into tradable language? I love the trade, by the way, Victor. So let's do this. Check it out. And the cool thing is, Victor, is I can see that you got in, and you didn't get in on the bounce of from the 1-to-1s. You got in actually above the 1-to-1s. Let's see if we can turn this into going back to the core rules. So the mid band with the large triggers a full bar away, this is a termination condition to the upside. So you're doing great. Termination condition reverses the market. Strong top. That's warm fuzzies number 1. Strong triggers. That's warm fuzzy number 2. And here's where we get a little challengey. Price is hitting this divergence low. All your triggers are above it. And you have to say, not a clear path. Let me get my management hat on. You with me so far, Victor? Large chart says, check it out. You're coming from a great spot. You've got the best momentum ever. Here's the fly in the ointment, but it doesn't necessarily kill the trade. So you go to your small chart. When this reversal bar prints, price is most likely to retrace somewhere from the bottom of these triggers to the top of these triggers. Is everybody with me on this lesson? Your large and synthetic will define where the market is most likely to retrace. Areas inside of those trigger lines define where the market is most likely to bounce and continue with momentum from the large chart. If your reversal bar dissects a fib, that fib clearly is not creating a bounce. You go to the next areas. Victor, you got in a tick above the highest point inside of triggers, right at the very end of the retracement zone. A tick below probably keeps you from missing this trade occasionally. But what you did is you said, okay, I've got the termination, I've got strong triggers, and I know that this area could be a problem. I'll take the trade and I'll get paid before I ever hit trouble. Awesome. And then when you get down to the second divergence line, you get paid right at the fib. This exit could have very easily been that exit as well. Does that make sense? Beautiful trade, Victor. But how do I make it repeatable? Use the language. Pull back to an area inside of triggers. And what you've done now is you've not said, I got in here and I got out here, because that's hard to repeat, right? Because what if it isn't exactly the same? Now what you've said is I have a termination that reverses the market. I've got those strong triggers. I know that I don't have a clear path, but with a pullback to an area inside of triggers and tiny little risk, easy money. And for me, and you will learn the language, Victor, but what it does is the annotation makes it repeatable. Because if you wake up tomorrow morning and you look at this trade, you know exactly what you're looking at, what you're looking for, where you're looking for it, and you've identified the trouble that could create a problem. Awesome, awesome trade. And guys, remember, the annotation isn't for me. I can look at your charts and know exactly what you did. The annotation is for you guys. The annotation is so that you can repeat the good stuff. All right. Good morning, PJ. Let's see what you're doing, my friend. Took risky quick trade. Both triggers just past resistance on the large chart. Small triggers not fully in the large triggers. Triggers were not fully on the correct side. Entered, and my plan was to ride it to the 1-to-1 resistance. Was able to reach my target. All right, so let's look at it. Your entry was at 60.22. So your entry came, first time it's at 60.22 is right here. PJ, you have a strong trending market. 30 plus bars in the same direction, coming from a strong bottom. I like it. Small triggers are above. One of the large triggers is above. So what you're saying is that with all this giddy up, I'm going to jump in and I'm going to hope it makes my target, right? Is that fair? I love the jump in trades. Probably could have even done it a little earlier and gotten paid right at Fibonacci resistance. And here's the exact same trade to get up to the next 1-to-1s. So guys, when you're jumping in, ask yourself why. So took a risky trade. Why do you think it's risky? So let's go through it again. I'm going to beat a dead horse today. Strong triggers, because it's a strong trending market. 30 plus bars without a reversal bar is assumed odds favorable momentum. 3 triggers through resistance, more likely to break out than hold. And here's the fun one. Jump the fudge in because large chart screaming up with potential to break area. And now you just got to figure out how are you going to manage it, right? Are you going to manage with that divergence, a loss of momentum? Are you going to hold until you reach a target? And that's the only thing missing is how do you manage a jump in trade? And I love it because what you've done here is you've created that recipe. Do you have a predetermined target, a certain number? PJ, is it like $100? We'll hold for target or let stop get hit. I love it. 10 ticks. And what's your stop set at? So you're risking 120 to make 10. All right. And guys, I don't judge. And some people hate those ratios. I think there's times. I think there's times when it's appropriate. And I'm gonna share a picture on these. No worries, you will eventually. You're figuring it out. But do you see how instead of saying took a risky trade, talk about what's good, right? Talk about what's going in your favor. Talk about what may be problematic. And what you're going to do, PJ, is every time you go into the trades, you're going to say, oh, I remember this. And if you literally say out loud, I have momentum and this thing has the potential to break, it creates confidence. Let me find my perfect entry. Let me find my entry. And I think that with this look and the potential to break, PJ, I'm going to share a little secret with you. Decisions are made at lines. Have you ever heard that in this classroom? Buyers and sellers tend to make decisions at lines. There's a bounce, right? There's a bounce. If you're looking for these jump-in trades, when the large chart says do it, PJ, don't hesitate, get in. When you let the back of the bar clear the thing that could create a bounce on your entry chart, you'll find a little quicker entry there. Getting price away from what could create a bounce. And what it does is it gives you a little more room. So go back and study some of these and see if there were other entries. So here, strong trending market, clear path. Once the back of the bar clears that divergence high, there's your $100 again. There's your 10 ticks again, PJ. Great luck, man. Way to hold on to that large chart advantage. Odds favorable. All the momentum. There's your jump in. And you did get stopped out, break even. And then you just let it turn into a trend trade and make that money. Nice job. So here's one of the coolest lessons you'll ever get. When the large chart is perfect, your jump in trade, PJ, when it fails, very often turns into a trend trade. Have you guys seen that before? And let's go back to a live market real quick. We'll come back here. Large chart's great. If your momentum trade fails, there's your trend trade. If your momentum trade fails, there's your trend trade. Pretty cool, right? And then I think that was just a trend trade that didn't work. Opportunity, opportunity, and then finally with the third divergence right there, that's the one that pushes lower. That's the one that takes you out of the game. But then it just reverses. All the momentum, pull back to the mid band. Your momentum trade fails, becomes a trend trade. Potential to break becomes a trend trade. And now the market's just going down with momentum. So understanding what kind of trade you're in pays dividends too. And I'm going to let you in on another secret, PJ. In a short trade, as long as you are left of these triggers, that market's going to continue down. Until you get a close on the other side, that's your loss of momentum. That's a great exit condition for a trade that's based on momentum. And then once it gets back to it, down it goes and it doesn't go up again until there's a close on the other side of the triggers. Same is true going this way. As long as you don't get a close on the wrong side of these triggers, that market's going up. So you can kind of have those expectations. I'm in momentum. There's my advantage going away. What a great exit. Trend trades are different. On a trend trade, you're going to get these fluctuations all the way up to the target. So knowing what kind of trade you're in is going to help you manage a little bit. Here, the smalls are through, but the large are not. Potential to break. This area is not broken. If we're looking for the tiebreaker on the small chart, guys, smalls are down, large are down, synthetic are down. Could I take a low risk entry on a pullback to an area inside of triggers, hoping to break the area? That's up to you. You got to look at your plan, make a decision. Great trades, PJ. Let's see who's next. Not sure we have any more. Pete's got one for me. Once again, momentum and path. All the momentum, path is clear, and there's a great example. Enter beneath the one-to-ones, get away from the thing that can create a bounce, ride the momentum down to the loss of momentum. PJ, do you see that? This is a great example. When this chart says go, look how the one-to-one creates a take you out of the trade bounce. Look how the one-to-one creates a tail. But once the back of the bar clears that one-to-one, giddy up, man. Giddy up. I love it. That's that understanding that lines create bounces. There's no reason to trade into a line. Not when you can trade from it with all this momentum. Good stuff, guys. And look at that. It didn't break. Only 2 triggers through. 3 divergences on the small chart. It's got some work to do, doesn't it? And if you chose to take the trade from the midband inside of the triggers, you had to manage out. I love it. Patterns repeat themselves, guys, all day long. Only 2 triggers, didn't break. What are we looking at 9:38? Odds favorable, 3 triggers through. Divergence on the potential to break is more likely to kill the trade. If it takes momentum to break areas, divergence is a loss of momentum. Now we've got the area that didn't break. We've got smalls trying to break below the large. There's nothing in the way. Are the sellers taking over? Are the sellers trying to push back down, make this market go lower? Might be. Might be. We'll see. Don't have an opportunity yet for an entry. I can look over here and say, wow, I've got all the momentum in the world. So PJ, let's test your theory. If we just jump in, right? If this look fails, it's likely to turn into a trend trade. If I don't get a close on the wrong side of the triggers, this market is going to continue down. So guys, let's just see if momentum pushes down or if we get a fight and it goes up. But this is just a management lesson, guys. Until I get a close on the other side of these triggers, this market will continue down. And they're trying, aren't they? And if this momentum trade fails, there's a good chance it turns into a trend trade. Does that make sense, everybody? If I'm just going to jump into the market, I can be aware of that loss of momentum. If that loss of momentum happens, my next option, if the large chart is correct, is a potential trend trade. And it may not come get me. But that's kind of how that works. What kind of trade am I in? What are my advantages? What's it look like when those advantages go away? And that's just an unfortunate instance where I manage my momentum trade like a momentum trade, but those sons of guns don't give me the trend trade yet. Small's breaking below the large, larger down. We're coming from that area that couldn't break. First one didn't get us. We'll see if this one comes up and gives us an entry 2 ticks below. And guys, here's the cool thing. My entry at 37, my stop is about right here, 43. I've got 6 ticks max on this particular trade. Looking at the idea that with nothing in the way, every indicator down, momentum present, we're more likely to push down than we are to push up. And now it's just up to the market to let us know whether or not we're going to get that opportunity. And we'll see what they do. Termination holds directly into a fib. All the triggers are below. Too soon for a long. No shorts. Sitting on our hands. They're trying, aren't they? They want me. They're like, come on, let's go get Mark. Let's go get Mark. He's got a virtually no risk, all the advantages, here we go kind of moment. The fight is on, but it doesn't guarantee an entry. All right, guys, we're going to take about 5 minutes. We'll let this one play out. We'll see what it does for us. Right now, crude oil is lacking conviction. So if I'm going to take a trade with a lack of conviction, I'm going to go in the direction of my indicators. I'm going to read my indicators. My trend is down, my smaller down, my larger down, my smaller breaking below the large, and I have a clearly defined low risk potential entry should they offer it, and now it's just getting better. Now the momentum is stronger. The path is still clear. I still have an area inside of triggers. And guys, this might be an even lower risk shot if they just give me the entry. Sometimes it's not my money. You ever chased a trade all the way to the termination and just said clever things like, give me a pullback. I've got momentum. My path is clear. I've got an area inside of favorable large triggers. Ladies and gentlemen, this is it. This is my high probability, everything in favor of the trade. The only thing I can't guarantee is an entry. It's frustrating sometimes, isn't it? What do I do when the market doesn't come back? Absolutely nothing, John Novak. Because I don't have a trade in my plan that says just jump in. No, Morgan, you're making up your own rules. So check it out, Morgan. You're going to love this. You're going to be like, man, how did I miss this every day for a year? You can take a trade without. Says so right on the checklist. When you go to the next checklist, you can take a trade without. Hold on. When you go to the KISS plan, Morgan, not mandatory. What does a strong top or bottom do? A strong top or bottom makes you feel even better about it. But there's only 3 rules for the high probability trend trade, Morgan. It's odds favorable momentum, clear path, pull back to an area inside of triggers. Now, when it comes from a strong top or bottom, that's the warm fuzzies. That's feeling a little bit better about the opportunities that are coming in play. But this one fits every rule. Whoops, mid-band got lower. And I was looking at you guys and not this one. Let's see if we get that entry. There we go. Where shouldn't the market go? 1, 2, 3, 4, 5 ticks above triggers. And now I'm powerless. It either goes up or down. Did I follow my rules? Did I follow my plan? Whoops. We won't even watch it play out, guys. Let's write rules on a chart. Did I have strong triggers, guys? Give me a Y or an N, please. What do you think? Separation between the small and large, smaller below the large, larger wide, space between. What do you think, guys? Rule number 1 met? If you're not sure, say not sure. Yes. Did I have a clear path? Price hadn't reached Fibonacci support, hadn't reached the divergence low. Absolutely. All right, Kathy, for the hat trick. Did I take a pullback to an area inside of triggers? I know through study this is a trade that has the potential to win 70 to 80% of the time. The outcome is 100% out of my hands. 100% out of my hands. But I followed my plan. It's a pattern that wins more than it loses, and my stop is precisely where the market should not go if this is going to be one of those winners. And sure enough, they got me. That's okay. That's a cost of doing business, guys. With momentum and path, with a pullback to an area, stop where the market shouldn't go. There's even some of you that'll say, you know what? This is still the right trade. If I get a reversal bar marker in the direction of the trade, if they confirm that they're going down with momentum and path from the area inside of triggers, I'll take another shot. Are the rules still met? What do you guys think? I feel like they are. All right. Stops above the reversal bar that got me in. First target's at 100, second target's at 200. Doesn't guarantee a winner, but when I talk about the advantages that I have, I don't feel bad about this trade. What I'm up against is a market that hasn't been following through, but I'm just going to follow my plan. If my plan doesn't work 3 or 4 times in a row, guys, that's when I start saying, okay, is the market doing what the market typically does? Is the market following through with momentum? Is the market following through with path? Is the market following what the market typically does? Currently on the ES, is it a strong bottom? So first it's a termination. Once those large triggers roll, PJ, absolutely. Strong bottom all day long. See how the small triggers got through the divergence here? That's a weak bottom, which lets me know that when these areas hold, that's precisely where they were trying to get. So now we have a strong bottom. Now we're getting momentum. You guys are going to be looking for stuff. And these guys, crude oil's chock full of shenanigans today, aren't they? I love Simulator. Simulator is such a great way to just practice. Practice entries, practice exits, practice recognition. I can't lose. I can't win, but I can't lose. I can't lose money. Sim 101, guys. So now what do? I take this chart and I say, do I have strong triggers? Yes. Do I have a clear path? I do. And now this is where I have to define my second chance entry. With large chart advantages still in place, I choose to re-enter on a reversal bar in the direction of the trend momentum path. Doesn't guarantee a winner, but now when I go back and study this picture, I know exactly why I entered the first time. I know exactly why I chose to enter the second time. And now I have to be okay with whatever the result is. But my large chart didn't change. My large chart never gave up the momentum. My large chart never gave up the path. Guys, they got me high tick. It's like they had cameras on me, testing my resolve, seeing if I believe in the patterns. Not everybody's into second entries. You force it to make up bars on the large chart. Right on. No up bars, no exit. So John says he would put his stop behind the reversal bar on the large chart and accept the extra risk. Force the large chart to take away his advantages. And where are they probably trying to get? Probably down to that divergence low. And John says if you take a 12 tick loser twice, you risk 24 ticks as opposed to risking 15 once. And that is true. Stuff to think about as you build a management plan. There's our first target. We could go break even per the KISS plan. Hold for that divergence low. Or we could exit at 08. That's the $300. But what's going on in this trade now, guys? I still have momentum. I still have path. And now my small chart just keeps getting better. My small triggers have rolled. I'm on the left side of those triggers. My large triggers are rolling. I'm not going to worry about this blue line. We're going to see what happens. I can take all the risk off the trade. I've already been paid. Now we'll just see if it goes. Does the large chart want to win? Do those large chart advantages, can they push me down to that target? We'll put it at 08. We'll make it a $300 endeavor per the KISS plan, which puts me a couple ticks above the potential target. Is everybody with me on this one? Why did I take the first one? Because it was the perfect high probability trend trade entry. Why did I take the second entry? Because absolutely nothing changed on my large chart because the rules are still met. It was just an unfortunate circumstance. And then John gave us some great input. Force the large chart to make an up bar when it's perfect. Accept a little extra risk. That was the art of chart reading. What is the market doing? The feeling of the day. Was that the top? How strong is the look? Is there anything in the way? John says everything is down, right? Close below for the short, right on the end of the bar. Guys, that's the same trade we're in. Now we've got a pivot stop out down here. I still have areas inside of triggers with everything saying down. There's my pullback to it. We'll see if this one creates a bounce. I don't know if it will or won't. I've got nothing to lose and I got paid, guys. I'm pretty happy right now. There we go. We're out. Are the rules still met? It still might go down. We'll see what happens. A lot of great lessons there. Thank you for that, John Novak, on the reversal bar. I think that's going to pay dividends for a lot of people. Guys, I'm going to take a few minutes and go stretch my legs. When I come back, we're just going to read charts some more. We're going to talk about what we see. What are the advantages? Is there an opportunity based on those advantages? So I'll be back in just a minute. Go stretch your legs. Post them if you got them, guys. Trader always seems to wait for me to take a break and then it crashes. John, it took him out. If it took us out and then headed down, huh? Bummer. All right, let's see what John said. Personally, force it to make big up bars. We saw that one. Great work to do it live. Just talk through the thinking. It's fun to do that. That blue bar you didn't worry about until it got you. Why don't you worry about the bars or not? Okay. So David will cover that. Looks like John already. He said, "Don't never worry. It's rules met for management, entry, stop moving or not." But David, I'll go a little deeper into that. I'm going to go just a little deeper into why that divergence low isn't really a phase you kind of thing. Because, are you with me in here, David? So there's one look that is like the absolute best look you could ever take. And that look is that odds favorable momentum. Whoop, get up there. Strong triggers, clear path, pull back to an area inside of triggers. And I know you're familiar with that one. That's the best look. That's the best of the best look. That's the look that you're like, oh my gosh, there is absolutely no way I am ever going to miss this one because everything is perfect. Does that make sense? Yeah, it does. So I'm exasperating a little bit. So when I have this look on a large chart, the only thing that's going to keep me from trying to reach my targets is losing my advantages, which means that when I have strong triggers, I have momentum. I have the momentum. When I have a clear path, right? No terminations. The only termination that could pull me out of this one before I reach the large chart area, David, it would take 3 of these divergences. Because on a small chart, the only thing that'll ever keep me out of a high probability trend trade is 3 divergences. It's a termination whether it's a small chart or a large chart. Pivot, 2 divergences don't phase me. When we talk about one-to-ones, right? Not a termination, doesn't phase me. Small triggers turning against me, doesn't phase me. As long as my large chart is perfect. The only thing that I'm going to let pull me out of a trade on the smaller, faster chart, let me figure out. Oh my gosh. There we go. Drop down menus. They changed it again. There we go. 3 divergences on the small chart. So David, that's the don't worry is the easy answer. Don't worry because this is really the only thing that's going to kill my high probability trend trade. He's just an extension of you, John. Great question though. And it goes back to David, and I hate to sound like a broken record. It goes back to always speaking in advantages. And this trade is a great example. Large chart is perfect. Small chart entry is perfect. So sometimes people say, oh no, a yellow 1-to-1. My advantages never go away. And honestly, it just gets better because now my small chart triggers are in the direction of the trade. I reach these I reach this divergence high. Nothing's changed. I still haven't made it to my target. So what I'm doing is I'm saying I believe in this large chart. I'm going to force something drastic to happen on my small chart to take me out of such a great look. Does that make sense, David? That's the long-winded version of why it didn't worry me. Good stuff. Good question. And look at that. When they decided to let go, boy, they decided to let go. Any of you momentum traders catching that chili dog look? All right, John says, I don't mind a break-even trade. Even stop after a target, but this is why the bottom was better than we saw initially after a long, careful chart reading. Have to manage if lines do not break versus strong triggers. I plot one-to-ones bigger. Double chart short-term termination. Small trigs above large. No, small triggers are down. Synthetics are down. So one of the things, and guys, this is going to be debatable, I think. Small swing one-to-ones on a crude oil chart are rarely problematic. Rarely. So much so that when we discuss areas each and every day, we don't put them into the list for termination conditions. If we're taking a very simple approach, it just didn't work. They came up, retested, and down they go. But if you notice these small swing one-to-ones, and you notice a pivot stop out right at that key area, sorry, I scrambled my charts for a second. Can you manage out of the trade? Absolutely. That's why we were break even in the trade. We had already taken profits. Things weren't railing. We'll take that break even trade and wait for the next best example. Wait for the next best opportunity. So good stuff. It's a constant fight. Small triggers are working their way back inside. Still strength, not odds favorable strength. Our path is clear, but I don't have any areas inside of triggers. So if we go back to the idea of speaking in terms of advantages, the momentum is dying a little bit, but the path is clear, but I can't define an entry because I'm on the wrong side of the triggers. You have to make a choice. Do I take a trade anyway? Do I hope a mid-band holds? Do I hope it doesn't go past the one-to-ones? Do I hope it doesn't pull all the way back up to the mid-band? Some people say, with this look on a large chart, with room to key Fibonacci areas, if I get a reversal bar from one of these areas that could produce a bounce, it'll allow me to establish risk. It'll allow me to take an opportunity at the short. Doesn't guarantee a winner, but at least I don't hope something holds. I force it to hold. Does that make sense for you guys working confirmation bars? Large chart says down with nothing in the way. Small chart makes it difficult to define an entry. There's a good chance it'll bounce off of one of these with that large chart look. Can I force it to bounce? Can I make it bounce? Remember, nobody can make me enter the market. I have to make my own decisions. My decision would be, if this momentum is good, if my path is clear, but I can't define an entry, I'll force the market to go in the direction of my trade. And what that does, it allows me to put a stop behind the reversal bar that gets me in. Does that make sense to everybody? Not a down bar from the middle of nowhere, from an area that could produce a bounce. So there's my area. Good look here. And I'm just going to say, if I get a reversal bar from the area, I'll take the trade. If I start going too far past, guys, I don't want this trade anymore because now my small triggers are up. Now my large triggers are rolling. This is pretty much where it has to come from, or I'm just going to say, you know what? I'm not interested. I'm losing my advantages. That's it. So that's game over for me. We had an opportunity. What, John? Why stop limit versus stop? Because I want to enter on the reversal bar. Oh, I don't know. I guess I could do sell stop market. I just clicked the wrong one. My bad. But see how no reversal bar, no trade, guys? Force the market to give you what you want. Stop limit will put a limit order in. You may never get a fill. Stop market entry is guaranteed fills. Right on. I just made a mistake. Live. in front of all of you and my brother, my boss. Guys, I'm going to go to the unemployment office. Price reaches the mid-band area. Large triggers are below the reversal bar marker. Ladies and gentlemen, once again, we're witnessing that gap theory in play. One of the patterns that you'll recognize is very often the market will come back and test these large triggers. We'll see if it does. We'll look at Pete's for a second while we're looking. I already know what yours is, Pete. All the momentum, nothing in the way. Get below trouble, just get paid. Nice job. All the momentum, nothing in the way. So PJ, I hope you're paying attention because I know you like this trade. Get below the trouble and just zing pow. And with this look, he sits through the shenanigans. Gets paid, then he gets out with that loss of momentum. Nicely done, Pete. I knew I'd see a momentum trade from you out of that. Guys, clarity grows every day. It really does. I think talking the live market through is a great way to do it too. Morgan, odds favorable momentum. 3 lines through. Morgan, have you been here for that talk? 1, 2, 3 lines through the problem area. Easy to define entry and just money, dude. Great trade. Great trade. There's your mid band. There's your large triggers. We'll see if it comes back to it. Doesn't have to, but it certainly could. What it tells me is I'm probably not going to try the first long with these triggers trailing so far. Let me open up my S&P, guys. I forgot that I crashed. I was like, where's my S&P chart? Here it is. All right. What do you guys want to talk about? What's on your mind? Ryan, Steve, Victor, Miss Kathy, GWC, David, T45, Morgan. There's Morgan's trade. Morgan, the three line thing that John Novak presented changed every way I look at it. Changed every way I look at it. There it is right there. 3 lines through. You had your first entry. And then it fails with the 3 divergences. You think because you take so many 50-50s that you started just taking strong tops and strong bottoms to be part of the high probability trade? I was thinking the same thing when you were asking that. I think you got so focused. But look at that. There's your strong bottom. There's your 3 triggers through. There's your perfect entry, and that was your easy money, Morgan. That's the pattern. One of the things that happens, and it happens a lot, is I'm taking a trade, right? And I know the rules for my trade, and then I add a second trade. And we rarely give the second trade the same attention that we give the first trade, right? The first trade, the high probability trend trade, we all took 30 days and studied it and practiced it and circled tails and looked at entries. And then we added that 50-50 trade and we said, well, let's take it, right? And it's not uncommon to mix rules a little bit, to add a rule here or to omit a rule there. One of the reasons I think checklists are so effective, and I showed this to Paul this morning, and I'll show it to you guys. When I'm trading on TradingView, I literally, so this is my plan. My plan defines how I'm going to use the charts that I use. My plan defines where my entries come from. And I've got a checklist. And I should be able to, every trade I take, if I take a trend trade, I should be able to say yes to each of these if I'm following my plan. If I'm taking an HVA trade, the same is true if I'm taking a momentum trade. And what having this checklist printed out in front of me does is it saves me from opinions, guys. Price reached the yellow 1-to-1s, none of the triggers broke. No matter how bad I want to take a long trade, I don't have a clear path. I don't have separation between my small and large. I'm lacking momentum. So if I go back to that picture and I say, dag nabbit, I'm missing momentum and path, why on earth am I looking for an entry? I'm talking about advantages every time I look at a trade. PJ, that was a question that you had in regards to pullbacks. Do the triggers on the correct side matter on the small chart when the large chart still has a clear path and momentum? Probably made a rule for myself, but I don't take trades because of the triggers not being on the correct side of the small chart. Are you talking about those 50-50 trades, PJ? No? Can you show me a picture of what you're talking about? I have an amazing imagination, and sometimes I don't see what you see. The pullback that I just mentioned on this chart, right here? Okay. So again, what is it about this that you don't care for? Is it the trigger look? Is it the divergence? Okay. So you're saying it's not that look, right? It's not odds favorable momentum. This is awesome. Watch this. This is a John Novak trick. You guys are going to like this. Do you remember, PJ, where we define the advantage of momentum as we look for a trade? It's a large chart definition, right? So watch this. Come on. Oh, this is the S&P. It's going to take a second. So one of the reasons that we use these large chart advantages is look at this. This is the bar where the entry came from. Inside of this bar is all the strength in the world, right? That's your best trigger look you could ever hope for. That huge separation, that odds favorable momentum. Taught this every day for 6 years. You also had room to your targets. So one of the great things is when the large chart is screaming up, when the large chart has nothing in the way, this little loss of momentum, what it does is it gets me back to my entry. These small triggers turning against me is just enough loss of momentum to get me back to my entry. That one divergence is just enough to get me back to my entry. But I'm back to my entry right here, and my large chart never blinks. And I'm all the way back up here, and my large chart never blinks. And that's one of the reasons why we do the two charts. Because your large chart advantages are hard to stop. They're hard to break down. And when the large chart is absolute rock star, we need just a little loss of momentum on that small chart to get us back to that perfectly well-defined entry. Does that make sense? We may have just opened some doors for you. I love it when you guys say, hey, Mark, that's not a trade. Or Mark, that's not my trade because when you do that and you take the time to post that in the room, so I'm very appreciative that you did, it opens the door for conversations. This is the chart that I usually use for the objections. And we'll talk about why, and then we'll get back to the live market. So large chart on this bar has odds favorable momentum. The triggers are through the area. And this chart is absolutely perfect. And there's a list of objections that I get from new users, or I should really say, if we're being truthful, there's a list of objections that I had as a new user. The first one is, well, I just don't have room to my target. And I know that this is common because this has been brought up once a week for the last 5 years. I don't have room to get to trouble. Well, when you enter the market from the area inside of triggers, that tiny bit of room turns into a lot of room. We had that lesson again this morning. That's one of the most common objections. And that's why we don't just jump in at the top of the move. We wait for the pullback. Well, I hit a termination condition on the small chart. It opens the door to remind you that terminations are found on the large chart. My small triggers turned against me on the small chart. Well, that reminds you that momentum is defined on the large chart. So one of the best lessons you can take right off the bat, and PJ, I think we're probably already outside of what you need, is remember where your rules are found. And then if you need to take that a step further, remember why they're found, where they're at. Because your large chart is a reflection of the people who control the market. The large chart is showing you visually what the people in charge want. The small chart is like the small crowd that fights, right? And we anticipate and we embrace their fight, but we use rule number 3 to pinpoint exactly where they're most likely to fail. So sometimes we'll see those small chart challenges, but they rarely overwhelm the large chart advantages. Good stuff, PJ. So now you can go back and look at some of the trend trades that you've skipped, and you can say, hey, that's not a problem anymore. You just doubled the money you get to make in the market. As a brand new user, I thought I was being conservative. And I would look for every reason to not take a trade because I was so terrified of losing. And John Novak used to say, dude, stop looking for what's wrong. Always start with what's right. Always start with your advantages. What's in it for me here? And if there's a lot of great things, well, then you start to work around the idea that little things will keep you out. So there's another great example. Anybody take this one? There's all the momentum, right? You haven't reached your target. These are weak, but they pulled right back a couple ticks above that midband right at the bottom. Retail traders account for 5% of all volume and 95% of all the losses. That's a Pete trade. That is definitely a Pete trade. And it goes right to Fibonacci resistance. Rinse and repeat. Momentum and path. Weak bottom. Triggers rolled. Up and separated. Odds favorable. Clear path. Giddy up. Giddy up. Get paid. 2,300 is not a bad day, Pete. Big boys lose all the time. Why do you think they only make 7 to 12% a year when you can do that in a day? Amen, John Novak. You could make a living off 2,300 a day, I think. You could probably play golf a lot. Hang out in the Keys, go scuba diving, go parasailing, jump your motorcycle over the Shark Tank, all those things. Hopium says, do not quit, keep going. Yeah, it does. Trade it all. Learning when to stop. What a great skill. All right, guys, crude oil. Directly into resistance, directly into one-to-ones. My triggers haven't broken. Pump the brakes. That's all it is. Just pause. Just pause and wait. See what they're going to do. S&P, weak triggers, but a clear path. No area inside of triggers. 2 out of 3 missing. Probably not my best look. I choose to wait. All right, John, your daily goal is 800 per contract. You will keep trading until you have a $200 trailing stop per contract from equity highs. Your daily max loss limit, number 1, is 400 per contract. When and if I hit minus 400, I will assess. If I took all perfect trades with 0 rule breaking, then I will take a break and return to trade again later. If I did break any of my rules or did a poor job of trading, I must stop trading live money for the day, make simulated trades, and do not do any more damage. Either I am off or the market is off. Important, never blow out, and never lose more than $750 per contract in one day. Rules for when to quit. Pretty awesome, right? Clearly defined. Guys, this is what we call a trading plan. And a trading plan is John's outline of how he's going to run the day. So I'm going to see if I can copy his text. I want to show you guys something. Easy to plan, hard to do in the heat of battle. Amen. So here's my TV plan, guys. My simple plan in TV. Don't even need those. Before I ever discuss my entries and where they come from, I discuss my goals, when I'll stop, right? So this is what I'm going to do with my day. This is how I'm going to do it. Does that make sense? This is a great template for a trading plan if you need to build your own. This is exactly what my goal is. This is exactly what I'll do if I reach it. This is exactly when I'll stop. And here's the plan I'm going to follow to either hit my goal or reach my stop limit. Thanks for that, John. I'm going to leave that in there. I'm going to save that on that. Just put that on a sticky note on your desktop. I love the notes on the desktop, Pete. That's one of my favorite things to do. And especially, have you, oh my gosh, Steve, you're going to make me work for this one, man. So 13.251. All right, so we're going to start with your crude oil. Pivot, stop out, strong bottom, triggers roll. Rolling off the bottom, you take the momentum style trade. Doesn't work, momentum fails. But because of the large chart, look, because of the large chart termination, it pulls right back to the mid band, right at the small triggers, and off it goes. Great trade, Steve. All right, John, we'll see you in 10. This is a trade. John, do me a favor. Drop the picture from 2004. When a termination holds, buy the pullback to the small triggers. Because this is something that's 21 years old. When the termination holds, the small triggers roll and go vertical. Steve, maybe that's a great patience piece for you on this one. You're looking to ride that momentum, but a lot of the times it does pull back. Great trade, dude. Awesome trade. All right. So here we have a weak bottom. Don't have momentum yet. Do have a clear path. You did have an area in between the triggers and out at the second divergence. And I love the management on this one, Steve, because look at your synthetics. Your synthetics are still down, 100%. And when you hit that mid band, they're a full bar away almost. So great management on a little more aggressive trade. Does that make sense, Steve? You don't have momentum. You're flirting with a clear path because the large triggers are still down and away. Can't really call this one a high probability trend trade. To call it a high probability trend trade, you would want your large and synthetic at least go in the same direction as the trade. And you're missing fibs on the large chart for sure. Good stuff though, man. And then a 1 minute crude ES. I'm not sure what all that is. Good stuff. I got you, Paul. So break time, F1. Anyone on prop firm has trouble seeing stats on the dashboard? This is how you get to them. Thank you. So Paul, what he's saying is, so let's say that John is up his $800 right here. Right? And John says, I'll take the next trade. Because he has less than $200 risk. So he'll take the trade and make the money. But if he loses 200, then he's done for the day. He'll shut it down. So once he gets above his $800, once he reaches his $800 goal, he won't walk away from that day with less than 600. But if he wins this trade and then he's up again and up again, he'll keep trailing. So let's say he wins this trade and now he's up 1100. The worst he's going to end his day is 900 down. And if he wins another trade and he's up 1300, the worst he's going to end his day is now 1100 down. So he'll actually follow his equity highs. And instead of giving back, being up 1300 and saying, well, I've got 500 to lose, he'll say, I'll only give back 200. Because John knows that the whole point of day trading is to get paid. And he's learning how to do that more than he gives it away. Does that make sense? Does that clear it up? John, did I say it right? Do it per trade. Absolutely. Start to finish. Good stuff. Guys, weak triggers, clear path, hard to define the entry. If you took the reversal bar, maybe an opportunity. Termination reverses the market. Steve, do you see it? Oh, there it is again. If a termination reverses the market, strong small triggers. There's your pullback to the small triggers, guys. So if you took the momentum trade, that's your opportunity right there. Nice. And it goes right to the mid-band. And now the triggers are a full bar away, and you sit on your hands. Oh, John's using trend lines. It will get to target, or it'll break out of trend lines. That VWAP is crazy, isn't it? That VWAP is nuts. Draw raise from a high with divergence. Follow the line down. Copy and paste that line here. There's your trend channel. This is a little more patterns. I don't use trend channels very much. I've just learned about them. But a lot of people, they're pretty popular. All right, guys, we're going to see. Price reaches a mid-band. Large triggers are a full bar away. There's that gap theory again. We're going to see what they do. There's your pattern. So if you were thinking mid-band, but the pattern says it can close the gap here, you've got a lot of risk on a trade. If you say this was a strong top and this is momentum, and I really hope it breaks, that's where using a confirmation bar gives you the opportunity to redefine risk, but it doesn't change the idea that the market still has the potential to pull right back to those large triggers. That's your gap theory. It's on the spreadsheet I give you guys, and you'll see a lot of examples. If I can click on the link. Price reaches the area. Large triggers are a full bar away. That's your gap theory. We'll see if we can find a picture of it coming to fruition. That's not it at all. Price reaches support, mid-band, large triggers are a full bar away. That's the gap theory again. So you're going to start to see this pattern repeat itself. And by allowing those large triggers to get closer, you have a better shot at not getting run over. Termination, triggers roll, sell the pullback to the HVA. That's your trading view plan. And John, that puts you in right here at 33, which is that trend trade. So using a different platform. No way to take on Just Ninja easy. I agree. That was harder to do on Just Ninja. PJ, gap theory means possible pullback. So all it is, so the gap theory is a pattern. One of the things, PJ, that seems to be a gospel truth, and this is a good example. So I'm going to take a picture here, then we're going to go find the gap theory, is price pulls away from large triggers and it returns. And this is one of the reasons we look for areas inside of triggers for entry. Price pulls away from large triggers and it returns. And you see this repeat all over the place. And that's why entries come from areas inside of triggers. Well, one of the things that happens is if those large triggers can't keep up with the move. And this is a good example right here. Whoops. Unless I do that, in which case we have to go back and redo it. So in this particular example, price pulls all the way up to something solid in the form of the midband. Do you see how the large triggers are so far away? More than a full bar? That's your gap theory. And one of the things that happens is when you see this more often than not, remember, because we can't say absolutes, it's not all the time, but more often than not, price closes that gap to the triggers. Accelerates away, closes the gap, accelerates away, closes the gap, and it does it repeatedly. Accelerates away, closes the gap. So you can use that, PJ, as a little bit of a safeguard. All right, I'm thinking long, I've got momentum. There's nothing but a midband there. But that gap theory says, all right, let me be a little patient. Let me pump the brakes. Let me wait just a minute. And that's why I said, if you're going to fight the gap theory, if it's present, but your conditions are awesome for the trade, that confirmation bar, that reversal bar, what it does is it says, okay, now I'm going in the direction of everything good. Now I'm going in the direction of the trend, in the direction of the momentum, in the direction of all that good stuff. So instead of having to put my stop up here where the market shouldn't go behind those triggers, I can put it right here. And it doesn't guarantee the winner, but what it does is it cuts your risk by like 70% because of that huge gap back to the triggers. Does that make sense? So once you recognize the pattern, it goes back to that idea, I know what I'm up against. I know that I'm up against the gap theory. How do I change my approach to not have that huge amount of risk on the trade? And we'll see if it does it here. We'll see if it clears to those large triggers, multiple divergences. We'll see what they have in store. Pete's, termination, triggers roll. You take it on the way down. You get out at the mid-band because the large triggers are a full bar away. So there's a great example, PJ. Gives you a place to put your stop, gives you room to manage, and then you go through the process again. Nicely done, Pete. And we'll see if price closes the gap back to those large triggers. And if it does, they're going to make a decision. Do they want more up? Do they want to go down? Three divergences in the same price range is a small chart termination, may push the market higher. Have you guys noticed that it's the same thing every day in the market? There's your gap theory again. Look at that one, PJ. Price accelerates, hits the mid-band, large triggers don't follow, keeps you from taking the short. And when they get up there, that's when they make their decision. That's awesome. There it is right now in the S&P. And when it's from a bad top, when it's not a termination that reverses it, the market loves to finish the move. Not guaranteed, but very often it's because they're looking for this fib right here. So there's your gap theory in all its splendor, keeping you from taking the short. Oil just made it to the large triggers. Three divergences. So Joel says, check it out. Three divergences. And let's go crude oil. And sure enough, it pushes the market higher. Is there something we can use to determine? There's your gap theory, PJ. Everything still says down from a termination with momentum. You let it close that gap. Now you've got a fighting chance with the reversal bar to see if they really want to scream down. Do you see how that works? PJ, this is such a good example. Could close the gap, manage assertively. Could close the gap, manage assertively. No reversal bar. Closes the gap. Absolutely nothing changes. Let's ride that scratcher down. Little expectation on patterns, creating opportunity. Thank you, Mr. Novak. My brother taught me that. And Pete's in the short now. And guys, if you don't want to fight everything, that snap back to the mid band, right at those small triggers that are coming down, that's kind of your second chance entry if you didn't want to take this one without an area. There's your little momentum look, and we'll see if it happens. Creating expectations based on the pattern. All right, this is one of my favorite pictures to show you guys. I'm going to take this picture here, and I'm going to go back to the education material. And I'm going to go to termination conditions from the educational material. And I want you to see this picture. This particular picture was crude oil in 2021. And I'm going to put it up against, I believe this was the S&P. Put this up against the S&P today. Market goes up with weaker triggers. This one hit a fib. This one didn't quite make it. Pulls all the way back to the mid band. All the way back to the mid band. Triggers don't follow. Closes the gap and finishes the move to the edge. Closes the gap and finishes the move to the edge with weak triggers. In 2021, the market reversed right there. Is that pattern enough to keep you thinking, man, I don't want to take that long? I literally have 45 pictures just like this because it's a pattern that's repeatable, that's testable. And what it is that patience piece. Hey, you've seen this, you recognize this, your advantage is gone. Let's sit tight for a minute. Let's wait and see what happens. That was your pullback to the mid band inside of the triggers. We'll see if they decide to go down or if they still want to go up. Pretty cool. Patterns are where it's at. Patterns are where it's at. The more patterns you recognize, the easier it becomes. Initially, your pattern is strong triggers, nothing in the way, pull back to an area inside of triggers. Guys, initially, that's your first pattern. When this pattern becomes easy, you start to recognize multiple divergences at termination conditions, creating opportunities. You start to recognize the gap theory, keeping you patient. And guys, there's a fight right here, right now. And now I'm not sure who's going to win that fight. So I choose to sit out, to stay out of that fight. Isn't that awesome? All right, guys. I'm going to take 2 or 3 minutes. Lose 5 ticks from the mid band, no biggie. I agree. Everybody's got different pain tolerances. Everybody's got a different pain tolerance. Some of you are willing to keep thousands on a trade. Some of you are tighter than others. As long as you have a reason. I'm with John. 5 ticks from a mid band all day long because my winners are bigger than that. My winners are bigger than that. I've got to get in the kill zone in order to have an opportunity to win. So I'm gonna take 5 minutes, guys. When I come back, it's your classroom. If you want to do some trading view stuff, we certainly can. I enjoy the trading view talks. I know there's a lot of you that are making this transition. John's been showing it a little bit in the room, how you can use it with NinjaTrader, how you can use it when maybe you're not using NinjaTrader, you want to use Nexgen funding. So if you have TradingView questions, please drop them in the room for me. I'll see you in 2 or 3 minutes and we'll finish out strong today. I'm back. So no, Paul, Nexgen is us. It's the indicators, it's the education. TradingView is the platform that you'll need to run the Nexgen indicators on to be able to use the funding company. Um, there are people, I believe, that are, and I'll show you exactly what they're doing, is they're saying, okay, this is what, I'll go to crude oil. This is what TradingView says. TradingView is telling me, hey, we hit a termination, the market's headed up, I've got a potential trend trade. And then what they're doing, Paul, is they're saying, okay, I've got a potential trend trade on TradingView. I'll take it on Ninja, or I've got it setting up the way I want it on NinjaTrader. I'll execute on TradingView so I can use the funding company. But what I'm really doing is I'm trading what I see over here. So termination, 1, 2, 3, 4, everything rolls. There's a potential entry, right? So instead of executing on NinjaTrader, I can execute over here and say NinjaTrader said go long, I'm going long. And then you can actually take advantage of the funding company like that. I've traded where I've used my my NASDAQ chart I'll have this over on the side opened up, and I'll have the 34, um, and I'll say, okay, I'm going up. I'm coming from a termination. This HVA looks like a good entry. What do my Rinkos say? And you can go back and forth. But what I have found is the further I get into TradingView, it's easier for my brain. And guys, I've never kept it a secret. My brain does better with less. My brain does better with fewer moving parts. But it's not difficult to execute a trade from Rinko on TradingView, and it's not difficult to execute a trade from TradingView on Rinko. I personally, I want to be a part of the Nexgen funding company, and I want to use that, and I want to have access to everything. So for me, TradingView makes sense. If you can't trade your way out of a paper bag, just buy and sell the HVA with triggers on the 1 minute chart and see how your week goes. Yeah, everything says up, buy an HVA. Coming from a zone, buy an HVA. Don't go short because the triggers are up. Go long to the short. Yeah, I think there's something to that. We were talking yesterday in the room for you guys on TradingView. If there was one lesson that I could give that'll absolutely change your life, that will absolutely change your life, is don't fight triggers on a 1 minute chart. If you're using TradingView, don't fight triggers on a 1 minute chart. Don't go short against them, right? Don't go long against them. Or a 30-minute chart. I'm just talking about entry charts right now, Mr. Novak. So if I'm looking for the long, I'm waiting for the close on the correct side. If I'm looking for the short, I'm waiting for the close on the correct side. It has been an absolute game changer. And when you look at the trend trade using TradingView, guys, it says wait for the close on the correct side of the triggers. So as you get to the mid band, you don't have a close on the correct side of the triggers. You avoid the giant spike. You get in above, and sure enough, the trade goes up, and it creates an enormous amount of patience using that 1 minute. Good stuff. All right, guys, we have time. Termination, pivot, stop out, add a fib, everything's rolling. I just skipped it intentionally, Pete. I'm full of beans today. Locking you out. Let's see what you did. Termination, there's your first one, right? I like it. After the gap is cleared, you enter on the way down, and you get paid right at trouble again. Outstanding trading, Pete. So there's the first one. First it holds, sell the pullback to the small triggers, easy money to the mid band, and then notice that he does nothing, waiting for the gap to close. And when it closes, everything still says down, and he goes down with it. Nice job. Really nice job. Once you learn this pattern, it sets you up for more. Good stuff. Termination, don't have momentum, do have a clear path, and I've got an area inside of triggers. 2 out of 3, right? Medium probability. If something changes, I might choose to exit. Smalls down, large down, everything down, nothing in the way. Mid-band's not a termination. Coming from Fibonacci that has been tested and retested. Just depends on whether or not they give me an entry, and it's extremely low risk. How's that for a pretty quick chart read? What's in favor? Strong top, really strong top because the trigger's never even rolled up. Small's down, large down. It just keeps getting better. Beautiful low risk entry right inside of triggers. Is it making sense? What's the one that I'm giving up here? If we go back to that picture of advantages, let's go back to it real quick. And I take this picture and I plaster it onto this chart. That's what I'm missing. 2 out of 3, medium probability. Does that make sense? I don't have the best momentum. I do have a clear path. I have a clearly defined entry that offers low risk. All I need now is for them to come get me. And because it's not high probability, my management hat goes on. And I say to myself, all right, if it starts to change, I might have to manage out. But all it's doing is getting better right now. All it's doing is giving me a lower risk entry. It's giving me a better look on my triggers. And sometimes you will chase this stupid trade down and it'll never give you an entry. And then PJ, going back to that lesson on where advantages are found, I'm hoping these one-to-ones give me a bounce. Hoping these one-to-ones give me a bounce. Because I've got the strongest triggers ever. I've got momentum accelerating. I do have these one-to-ones in the way, right? John Novak hates these things. I've got one line inside of triggers for a potential entry. My limit order is 2 ticks below it. Guys, I'll be at like 30. Stop. Very, very low risk trade. We'll see what happens. I'm not telling you to take it. We still don't have the strongest triggers, but I'll tell you what. For me, it's worth a couple bucks. I'll give it a shot. And that's really what it's all about. I've sacrificed momentum, but I have a clear path. I have an entry. It can be low risk. Now it's up to the market. Market didn't want to go down. There we go. When you give away one of the advantages, you have to say to yourself, it's not perfect. Divergence is a loss of momentum, right? And John, I'm starting to be a believer in these pink one-to-ones on a smaller chart. It's the same look as one-to-one. Yep. So now I'm starting to say, wait a minute, those could create a problem. But the recipe is the recipe. And John says waiting for a down bar helps. John says that's his entry signal because it defines his risk. If something changes, he'll get out. This is exactly what we did last time. Said down, got us, reversal bar prints, looking for the second chance. Either goes or it doesn't, right? If they do go, can we create an expectation that they're going to try to get to that previous low? Could we say, all right, maybe they retest here? So we'll take our first profits right at trouble, and then we'll see if it runs. That's all we can do. What are my advantages? What are my disadvantages? What's in favor? What's against, right? If divergence is true, second higher divergence, maybe not my trade. But we'll see what happens here, guys. Got in, manage your stop loss, waiting for support at 65.10. Maybe put a first profit target there at 65.10. Right on. So what's changed in the trade? My small triggers have rolled. My large triggers have rolled. My synthetic are still down. My smalls are below the large. My large are angled down. I'm coming from a termination. You got stopped out of the first one, back in again. Guys, stop outs happen, right? Stop outs happen. Watch this. Oh no, it missed us. We'll see if it pulls back and then continues down. And then the TV look. There's your mid band. Kind of confirms what we're talking about. We just have to see if they want to push. See if they want to push. At least this time you hit the first target. Yeah, I put my first target lower and it may come back to bite me. We'll see. We'll see. The KISS plan is always the highest probability, right? The best of the best, the easiest way to do it. You guys will grow and make different choices. I love a pullback to small triggers right at the mid band with everything pointing down. It's a good pattern. Give me a down bar here, I'll reduce risk behind it. I think it's fun to just watch and talk. What do we see? What's good? There's a second higher divergence. Some people exit. Some people say, you know what, with momentum and path, I'll sit through two. Reversal bar prints here. I'll reduce my risk. Reversal bar doesn't print. They're going to come get me. Weak triggers. Clear path. No areas inside of triggers. So 2 out of 3, right, Steve? 2 out of 3 missing. Waiting for a reversal bar with 2 out of 3 missing at least gives you a fighting chance. Weakness, no areas inside of triggers. Always going back to those cores. There's my reversal bar. I'll go a tick above it. I got 10 bucks on the trade. Probably should have got paid at 100 bucks, right? Victor, you hit your first target. I'm playing my bravado card today. Here we go. First target. We'll go break even. Let's see if they want the low. What do you say? Nothing to lose, guys. Momentum, path, entry. Momentum, path, entry. Can't lose the trade. The only exit condition, PJ, a third divergence, right? A third divergence in the same area would be the only reason I choose to jump ship with this look. And if it doesn't happen, guess what? We're going to hold this bad boy. If it does happen, we're going to mash the close button. We're about to find out. There's my exit condition. I'll exit that trade. 3 divergences, that's enough for me. It's going to have to go down and reset, and then I'll take another shot. Does that make sense? The only reason I'll exit this look is because of this look. And the cool thing is I see the potential of it coming. All I have to do is sit on my close button. We still made money. What are these guys doing? All right, there's our momentum. All the triggers are above resistance. It's behaving as support. I've got an area inside of those triggers. If I want to take a shot at momentum and path. You guys with me? See how quick that read happened? Pretty cool. Hit 1-to-1s here. Nothing blinked. Kept back up. The triggers are accelerating away from the large. They haven't put the gap in yet. If I get a reversal bar, then I can define entry. How we doing today, guys? Are you guys looking at your charts and starting to talk? This is what I see. I see momentum. I see the potential to break. I don't see momentum. can't define an area. That's the hope. Now we just wait. And Tom Petty said it best, guys. The waiting is the hardest part. Feeling pretty good about my third divergence exit. Feeling pretty good about my third divergence exit. I want to go back to a little something that we wrote on the KISS plan. 2 things you need to know, guys, before you sit down to trade and you're not on simulator. When you're on simulator, you're figuring these things out. You've got to know why you'll enter a trade. That's your checklist. That's your rules. That's your pattern. Guys, your rules should describe that pattern. Your rules, your checklist should say, this is what you'll see when it's time to enter the trade. And if you study that pattern, guys, and you can prove that it wins more than it loses, what happens is you know that, yes, it does in fact lose on occasion, but it wins more than it loses. And that removes a lot of the emotions because you have this very calming understanding that you're not in control, that you don't know what the outcome's going to be, but you do know that you have an edge, and it makes it easier to always enter that trade. Why will I exit my trade? Well, because my advantages are gone or my profit targets are hit. We just saw a great example of that. We took a beautiful entry, right? We took some profits at trouble, and then when our advantage went away, when 3 divergences print, we were able to exit that trade. And PJ, isn't that awesome? When I saw this, I did that. And it kept me from giving all of this back. So when you name your trades, you know what the advantages were. Clear path, no terminations. And when that termination shows up, it gives you a reason to exit. So guys, this is the KISS plan. This is the one that gives you the best of the best entry, and it gives you a way to manage it. It sets you up for that 50-50 trade, and I've added that 3 or 4 trigger lines through the area, and it teaches you how to manage it. And I'll drop this in the room again. So if you're one of the people in the classroom that are maybe fumbling around a little bit with consistency, are trying to get to the point to where they can get profitable as they try to find more, guys, that KISS plan gives you an opportunity to do that. But understand that it's not shackling you to that one trade. It's not holding you back. It's teaching you to read your indicators, and it's really teaching you to recognize advantages, because once you start to talk to yourself in advantages, like my dog understands odds favorable momentum because I say it when I'm trading, and my dog understands pull back to an area, and she gets excited and her ears prick up because she's heard me say it out loud so many times in my office. She just barked upstairs because I said it. So do that. So what do we see good on this chart? We see smalls accelerating away from the large. We see every trigger line above resistance, letting us know that it's likely to behave as support. Everything is moving north, guys. And if that small crowd fights, we can pinpoint with uncanny accuracy exactly where their fight is most likely to fail, exactly where the market is most likely to bounce and continue in the direction of the trend if this trade's going to be a winner. And if it's not going to be a winner, guys, I know exactly where I'm going to place my stop, right where the market shouldn't go, 4 to 5 ticks below that triggers. I know all of this before I ever enter a trade, and it's based on my rules. It's based on my checklist. I'm coming from a strong bottom. I have momentum. There's nothing in the way. Let me define my entry. And now I leave it to the market gods. They either come get me or they don't. Some of you are in that just jump in. I've got momentum. I'm above everything. I'm just going to jump in. If the jump in fails, guess what? I have my rules met for a trend trade. If the jump in doesn't fail, guess what? I'm getting paid. And I can say, if I get a close on the wrong side of these triggers, I'll look for the trend trade. If that never happens, we're going to Profitville. Population me. Does that make sense, everybody? You guys love to jump in. Gotta have a reason. Gotta have a reason. Momentum and nothing in the way is a great reason to do that. Some of you don't have that on your trading plan. Some of you are like, well, that seems pretty cool, but I need to study it more. I need to learn to believe it. I need to do it. Guys, let me give you my study on it. I went through and I spent a month working through what they call the chili dog. That's Ron C's trade. Guys, send him a fruitcake at Christmas. It up 175. I'm not giving anything back. It hit my target, didn't fill. Get up there. That's a pretty easy $200, wouldn't you agree? Momentum, path. Just jump the fudge in. See if it makes it. If it doesn't, we'll look for a trend trade. Hell. Lock in 100 when you get that close to your target. That's fine. That's your right. My job is to get paid. My account doesn't know if that $100 came from a little blip. I'd rather have the 200. But that's just me. Did that make sense? Momentum and path. If you just jump in, take quick profits. Looks like they may get us. Yep, they got us. $100 trade. No big deal. Let's see if they give us the trend trade now. Nothing worse than a profit target getting hit and not filled. And if you had really taken this at the close or when it gets above right here, you made your 200. I got in late trying to prove a point. If this trade fails, trend trade is the next option. And I don't know that this one's going to fail. I didn't really give it a chance to. I was hoping that it would, so it would become a trend trade. But guys, that jump in trade, momentum and path, I see a lot of you guys taking it. It's a pretty awesome trade. We've got about 20 minutes. What do you guys want to talk about? What's on your mind? How'd we do today? I feel like we did okay. That one's going to go hit the target one more time just to shake me. I love the chili dog trade. You see a lot of that in this room. One day, John Novak might let me put it into the paperwork. But it all starts with momentum and path, guys. Once you get those two, life becomes easier. There we go. If I just would have sat still, that $100 would have been $200. If I just would have sat on my hands and let it do what it was supposed to do. But I was really hoping for the trend trade setup. Let's see if those 1-to-1s are enough to give us a setup. Any questions, any comments, any hopes, wishes, wants, prayers, anything I can do for you? I told John Novak he should do a seminar. It's been a while since he's gotten in front of an audience. Trying to talk him into it. How do we feel about momentum and path, guys? Pretty cool, right? Odds favorable. Nothing in the way. Just need a pullback. I already made $100 on a little jump in. Just need a pullback. If I get it, cool. If I don't, well, you know. Not the best momentum, again. You've made a living off momentum and path today. I love it. Here we don't have the momentum. We do have the path. It's just not perfect. Guys, remember when John said sometimes you have to ask, is it the market or is it you? Sometimes it's the market. And when they're struggling to finish a move, it's all right to force it to be perfect. Pete, I think you make a living off momentum and path nearly every day. I would say 90% of the trades I take are momentum and path. Sometimes they're just momentum. And sometimes they're just termination conditions that reverse the market. But they all go back to that core. They all go back to, what do my triggers say? Where are they in relationship to the areas? Can I find a way to capitalize? And then you end up where you want to be. Slow and steady wins the race, guys. There we go. For the last 29 years, let an area hold. Look for an opportunity. If the trend continues, look for an opportunity. If you hit the next area, stop and wait for the reaction. We've been teaching this for as long as Nexgen has been an entity, and that is close to 30 years now. Steve, I know you're just trying to test my eyes, right? Everything says down. And Steve goes down with it. Great job, Steve. Trading with the trend and momentum. It works. Good stuff. Where's our next key area? All the way up at 61.44. Man. Guys, there is one challenge with that midband. And it's on the wrong side of those triggers. And these one-to-ones don't give me a chance to let a reversal bar form to wait for the pullback. That's a momentum trade look. When the small triggers break above and it snaps back, this entry is a shot at continuation the same way this is, letting it bounce. You get a couple bars down, you look for the trend trade. Trading with the trend, trading with momentum, trading with the path, trading from the areas over and over and over. Rinse and repeat. Rinse and repeat. Does everybody have checklists? Is everybody using a checklist? Probably not, right? I can give you guys this if you want to make one. This is a template that I used for the KISS trading plan. Write down your rules, guys. Form your checklist. And then take pictures of what it looks to have them met. What does it mean when my checklist is met? Guys, if you do this, that's consistency. Have you noticed that the people that tend to win the most in this room do the same darn thing every day? The same darn thing every day. Pullbacks, momentum, path, over and over. Morgan's a great example of that. Momentum, 3 triggers through, perfect entry, easy money. Almost every picture Morgan puts in this room looks like this. But Morgan also hides all his losers from me. He doesn't like to show me when he breaks his rules. Yeah, I think, Paul, that you'll find one thing, guys, having a checklist is awesome. It really is. But you have to be truthful. And I think that's where the challenge comes in. And Paul, I admitted earlier that I used to write what I wish would happen, not what was actually happening. So if I took, and I'm going to say this trade right here. And this was just me, and I'm not saying you guys do this, because you guys would never. But I would go through and I would say, okay, I have to write my rules on the chart. Odds favorable momentum, clear path, area inside of triggers, right? And I would create my checklist. And I would say, well, and this is where it happens. And I would say, well, yeah, I had momentum because I have to have momentum to enter a trade. And yeah, I had a clear path because I have to have a clear path to enter a trade. And of course I had an area inside of triggers because I'm supposed to have an area inside of triggers to take a trade. And guys, I don't. But what happens is the market rewards me with a win. This is what we call a short-term victory that typically leads to long-term failure. So having a checklist is amazing. Being truthful with your checklist is what's going to set you up for long-term success. I was notorious for that. I was notorious for not even taking pictures of losers because it just, I don't know, it affected my delicate nature. Um, Guys, you could write momentum and you could write clear path, but you can't write area inside of triggers for entry, which means that you know that the third rule is being broken. And you might say, with a reversal bar off of it, I'll still take the trade. But at least be truthful, because when you know what you're up against, you know how you need to manage. Odds favorable, clear path, jump in with momentum, and you get out of the trouble. Great trade, Joel. There it is. Joel did it better than I did, that's for sure. Did it better than I did. Nicely done. Telling you guys, a lot of you are going to find that trade. That's the trade that I taught my wife. That's the trade that I taught one of my best friends. It's the trade that I taught my wife's best friend. Because when the market's screaming and there's nothing in the way, you're going to find a way to get paid. What can I do for you guys? Losing my voice. What's your favorite flavor of jelly? I don't know. That's how you get everybody who's quiet. Post a picture of your dog. Appreciate it, Steve. I think it's helpful. So, true story. The 101 was designed for the demo users coming in. And it was giving this really basic approach to understanding the software. But I think that learning the software, John Novak and I had this talk, it's like learning a language, right? It has to be immersive, and you have to put yourself in the position to be able to not only take what you've learned, but see it real time. So you guys that are looking for that jump-in trade, all the momentum in the world, nothing in the way on the large chart, you've got to let the back of your bar clear here. And if it does, you may try the jump-in trade again. That's the chili dog. Until it clears the area, it did and failed, you'd have to clear the area again to consider. But that was your trading to it. Let it do its thing. And now we'll see if there's a way to trade from it. It's not just a business. No, you're learning how to translate what your charts are telling you. Real time, right? That's why I say we're chart readers first, guys. And you becoming a day trader is a byproduct of your ability to read the charts, recognizing advantages, having an edge, seeing what you can do. Looks like they're going to fight a little bit, right? Trying to push down. As once I get to the wrong side of these triggers, I don't know if, when, or where the market. Why doesn't it have a resistance line above the yellow 1-to-1s? I do at 44. Do you have something different than I do, PJ? Show me a picture of what you've got. So a couple different things can do that. The first thing I would ask, are you in Eastern time frame on your computer? I took my pink dots off, David. Are you on the Eastern time frame, PJ, on your computer? Or you have it in a different time zone? Do you have it set up to the UK time zone, though, that you're in? Cool. That's okay. So there's our answer, though. So my midnight is different than your midnight, which means that when your software starts running, and I believe you are 8 hours ahead of me. So when my software starts running Fibonacci calculations right here, your software is running Fibonacci calculations from right here. David, take care. Always great having you. Yeah, so we're in a totally different time zone on our computers. And when your software opens, PJ, it uses midnight as a starting point and not Nexgen's midnight, which is Eastern time zone, but whatever your computer tells it is midnight is. And I don't know if you've ever seen how fibs come to be, but starting at midnight, 10 days back, your software starts measuring every up, every down, every swing, every pivot, and it does all these calculations from it, PJ. So you've got an 8 hour head start on me. You've got 8 hours worth of pivots that factor into your calculations that my computer doesn't see, which means that when it does all of its calculations, you and I are going to end up with different lines. Does that make sense? Because the concentration becomes different because there's extra pivots. So trade your charts. That's one of the biggest things ever. Trade your charts. If you want to be consistent with my charts, you'll have to switch your computer to Eastern Time Zone, USA. And if you just want to trade your charts, have fun with it, man. I believe Miss Jen had hers on UK time for a while, but it drove her nuts not seeing the same thing, so she changed hers to Eastern. Some people are cool with it, some people aren't. Some people can't look at a chart and have it different than theirs. You'll be back to Texas soon? I like it. What part of Texas? Okay. John and I grew up in Houston, Northwest side. I have a house right now in Austin. That's where my kids are. Right on. Northwest side? Ha, us too. My kids went to school. We lived right off of Cypress Rose Hill. Both of my kids went to school. Oh my gosh, I can't think of the name of it. Right there off of Skinner Road. Cypress Woods, Cy Woods High School. Yeah, we raised the kids there and then moved to Austin. You went to Cy Springs? Went to Jersey Village. Cy Springs wasn't a school yet when I started high school. Thanks, PJ. Now I feel old. It was the trifecta. It was Cy Creek, Jersey Village, and Cy Fair. That's all there was. You're getting there. Hang in there. You'll catch up eventually. I've slowed down a little bit. That's awesome. You just working in the UK, hanging out, having fun, drinking pints, contracting? Nice. That's it. I'm in Washington right now. My wife's doing the same thing. She's working contracts. I'm talking to you guys, having a good time. Chef got you into this? Oh, right on. How's Chef doing? He doesn't come visit anymore. He's like, I got this figured out, Novak. I don't need your classroom. That's always the goal. Always the goal. Is that you guys fire me because you don't need me anymore. He's deployed somewhere? Oh, man. Well, I hope he stays safe. If you talk to him, tell him we miss him. Tell him hello.